It all comes back to the DNA. The firms that know who they are will know who to be. You can learn a lot about an investment firm by listening to what they say. Alco's Mainstream's AGM Originals, The DNA, Capturing Culture, is dedicated to capturing the DNA of a firm by listening to what they say. The first season of The DNA stars EQT, the global investment firm started in Stockholm in 1994 that has over 270 billion euros in AUM. I sat down for conversations with 9 EQT executives in Stockholm this past summer at their annual investor meeting. Each executive came from different parts of the firm and different parts of the world. Each had fascinating backgrounds and stories about how they ended up in private markets and working to build EQT. But there was a single through line threaded throughout all the discussions: the consistency and frequency that each executive talked about the firm's mission, vision, culture, and values. Episode 4 of Season 1 of The DNA stars Geraldine O'Keeffe, partner, EQT Private Capital, dedicated to the healthcare sector. Geraldine, welcome to the show.
Lovely to be here. Thanks for inviting me.
Pleasure to have you, and actually, thanks for having me in your office. But I think there's so many interesting things to discuss around what's going on in the healthcare investing world right now. You have such a fascinating perspective into that because you've almost lived 3 lives in the healthcare space, all of which are, I think, incredibly pertinent to how you now think about investing. So we'd love to start with your background.
Starting off, of course, as a scientist, I think my whole career really has been about science, lecturing biomedical sciences. Then I worked in the medical diagnostic industry for a number of years, and it was there I got more interested in the business side of the industry. And having completed some graduate studies in business, I found myself working for a bank in Amsterdam and spent about 8 years there as a sell-side analyst at Fortis Bank before joining a local venture capital firm called Life Sciences Partners. And while there, then I set up and ran the public equity franchise and got involved in some of the later stage venture investments until about 3 years ago, EQT acquired LSP and opened up a whole new chapter for everybody in the company.
What do you think your experience is as both, you were a scientist, you were also a lecturer, so you see the development of healthcare and pharma from that angle. You were a sell-side analyst, so you see what public companies look like, what good looks like. And you're an investor, both public and private companies. How do you think those first 2 lives that you've lived have informed how you live your third life now?
I think the healthcare sector is quite unique in that it's still very technology driven, and I think an understanding of the science and the interplay of science has a huge impact on being able to make the right decisions. I think it allows you to know what questions to ask, what are the relevant subjects and topics, and bring in the experts and the people that are more up to date in those fields when needed. So I think it helps inform your decision in the beginning, but in the end of the day, you need to get those products to patients, you need to get those products into commercial phase, and that has a completely different dynamic.
What do you think was the hardest part about going from the transition of being a scientist to then understanding the business side of healthcare? I
think for me, the steepest learning curve was probably to obviously get to grips with the financing. It's a completely different world, Excel spreadsheets, company models. To be perfectly honest, when they started talking about company models, I had no idea what they were talking about initially. So yes, that was a steep learning curve, but also fascinating, and I enjoyed it more than I expected to. And I also found that actually when you look through the finances of a model, say for even an innovative new drug, it really does make you think in a very different way about who is your target population, who is going to pay for this, what is the value it's bringing. And it actually, in a surprising way, helped inform my focus on the drug itself as well and how impactful that could be.
Well, I think that's an interesting perspective because then from the other side, you had the background in the sciences. What do you think those who have not had that background and only come at this from an investing or business background perspective, what do you think they don't necessarily have, or it's harder for them to pick up when it comes to healthcare investing that you have from being from the sciences?
Well, the first thing I'd say is that within EQT, we always work with a team. There's always a deal team. And I think that's very important that people come with different backgrounds and different focuses, so that I'm always learning from my colleagues who've come up through the finance side, and I hope they're also learning from me. So I think that's the most important part, is that we learn from each other and you're open and listening. So yes, while I would have a deeper understanding of how the healthcare system works. So it's not just about the drug development, it's all about the complex infrastructure of regulators, payer providers, manufacturers, that whole ecosystem. Having lived it for more years than I'd care to mention, I do bring another perspective, but I think I'm also learning from all my private equity colleagues all the time.
So let's go a layer deeper and break that down. I think the healthcare investing landscape is so complex because there's so many different aspects to it, and you have to add in the technical components. That's true in other industries, but it feels like healthcare it's even more protracted. Mm-hmm. How do you think about that from an investment perspective, and how should perhaps LPs really think about trying to navigate and understand the healthcare space when it comes to partnering with firms like yours?
Yeah. So yes, I think you're right. It is probably one of the most complex sectors in that regard. There is the science, risk, if you like, but there's also all the different regulators, FDA, EMA. You've got the pricing. Is always a big discussion about pricing and reimbursement.
Understanding how LPs, helping them understand how they should think about navigating the healthcare space. What's important?
Yeah.
What should they look for? How should they think about this really complex ecosystem?
I think one of the big strengths of what we have at EQT is that we are investing across the continuum, as I like to call it. And at each stage, there is a different dynamic for the investor. And different stages suit different investors better, because there's always a risk-reward profile associated with your investment. And that's true for any sector, but perhaps even more so for healthcare.
Let's unpack that a little bit, because I think that's an interesting topic. So early stage venture in the healthcare space can be highly risky, but obviously highly rewarding. Maybe a little bit flipped in private equity. In the current state of healthcare investing, where would you say there's more perceived risk, and where would you say there's less perceived risk?
Mm-hmm. Yeah, perceived is different from reality, of course. I think venture investing is always considered higher risk because you often have very little data to go on. At the earliest trial, it might be just a proof of concept, a few patients, and you really have to believe in the team, you have to believe in the science. Whereas on the mid-market space, where I spend most of my time, these companies have already got their products on the market, their commercial stage. They've already proven that there is a market need or want for the product, service, or technology they have.
When you think about the healthcare space, I think it's really interesting to think about this in the context of technology innovation. So is AI and other technological advancements, is that making certain parts of the healthcare investing value chain more risky or less risky?
Yeah, both. I mean, it's impacting everything, I would say. As I understand it, the larger the data lake, the more useful the algorithms can be. And I think there's probably no bigger data lake than you'll find in healthcare. So all aspects of healthcare, I think, are going to be disrupted one way or another by AI, and it's already happening.
What do you think is going to be the biggest positive impact of AI on the healthcare space?
I think it's going to, overall, in a word, I think it's going to improve the efficiency. And by efficiency, I believe that it's going to allow us to much better define what patient, what drug. If you think about it, a drug can be given to, 80% of the patients that receive the treatment may not have optimal benefit from that treatment. That's a huge cost to the healthcare system. But if you can really target the patient to the drug and use AI to really pull out these patterns, I think it'll be very valuable.
That's interesting when you think about cost. Obviously, someone's paying that cost. From an investment perspective, then, if we connect what you just shared with where that becomes most impactful from an investment perspective, where then is the best risk-reward investment going to be made if it's going to remove a lot of cost from the system?
Yes, because of course you hit on a very key point here, because for a long time pharma just wanted to have a drug that they could treat everybody. They wanted their blockbuster drugs and wanted lots of them, but in essence, a lot of patients were not benefiting from those treatments. Whereas I think that's been turned on its head now, and even pharma now have realised that actually having a much more targeted treatment that's much more effective benefits everybody. The pharma benefits, the payer benefit, and of course the patients benefit as well.
Does that change the way you think about investing in healthcare then?
Yes, absolutely. And I think that's also why I really like the space I'm in, which is the mid-market space, where these are still emerging companies. They're, as I said, commercial stage. But for us, the core thing is to find out, do these companies have, some niche that they can protect and that where we can help them to scale? Because you don't need to own the whole market, but if you can create something of real value to even a portion of that market, then I think it's got benefits for everybody.
You mentioned a really important point, which is the tenuous ground that some middle market companies might sit on, particularly in an environment where, regulatory regimes are changing. In some respects, that's due to political winds shifting. Mm-hmm. That impacts funding. The U.S. as an example, right? Funding for a lot of drug development and research has been shifted with political changes. So how does that make you think about investing in many of these middle market healthcare companies where there's a lot of regime change in governments now? Governments can't necessarily pay and solve for people's healthcare needs in the same way that perhaps they could, the amount of debt they have, et cetera. So how do you think about that from an investment perspective today and looking forward as to what the world may look like if it is in fact going to change a little bit?
Yeah, I think for now more than ever, I think the geographic distribution of the companies may be more important. If you're 100% focused on one particular market, then you have you're higher risk right now than ever before, I think. So I think also you have to remember we're focused predominantly in Europe, and I think forever, the US market has been the main commercial market for any healthcare company. Europe is growing in its importance and dominance, and I think having a foundation and a base in Europe and then scaling to the US is a big advantage rather than being 100% focused on the US market.
How do you think about that point in the context of how you can help future-proof companies? That's something you think about, talk about, actively do as part of your active ownership strategy at EQT. How do you think about then future-proofing companies if that's the way things are heading from a market structure perspective?
I guess part of that is geography, making sure that they are geographically diversified in terms of their launch territories or where their products are manufactured or where their manufacturing facilities are based or where their service is being deployed. Also making sure that you get really good insights into the regulatory environment and also pricing.
Is it harder to invest in today's world when some of the regulatory environments may be shifting faster than you might be able to predict or adapt to?
Yeah, that's, I suppose, well, as you mentioned earlier, I have been through many cycles in the healthcare system, and there's always some assault, there's always some risk, there's always something impacting the sector, be it political or pricing or reimbursement.
How do you think about investing through some of that uncertainty? Because on one hand, you're a long-term investor, and generally these things take time to develop and commercialize. But yet on the other hand, in a current state, it can be hard to invest when there's uncertainty.
True, and I think what the EQT perspective is we're not trying to time the market. Healthcare is a sector that we believe in today, tomorrow, and long into the future. It's one we have a long history of investing in. We've been around for over 30 years, so we don't try to time the market. We always believe it's a good sector to be in, but maybe slightly different flavors at different times depending on what's happening in the broader market.
Is there a prior time period that you look to today that best informs how you might think about navigating today and going forward?
The one it reminds me most of, I think, is around that the early COVID era. Whereas I guess this time we were just coming out of that post-COVID era, and there have been several changes in terms of, I suppose, FDA, NIH, discussions about most favoured nations. So all of these things together, it seems to be creating a bit of a perfect storm at the moment, which is a little bit different.
How did you navigate the post-COVID timeframe? And how did you think about investing then if you go back to that time and put yourself in that time period?
I think the big difference there was I think we hit a low point relatively early on in the COVID era, and then actually it turned out to be quite positive for the healthcare market because for once the drug companies were the good guys and there was a big focus on healthcare, and actually a lot of retail investors flooded into the sector quite quickly, so we saw a very fast rebound.
Are you seeing similar things happen today where you're seeing many investors exit the healthcare market just because of there's complexities even without the additional complexities of the current state, but the combination of those two things, is that creating a totally different dynamic in the market today?
And I think when we talk about it like that, we're really talking more about the public markets, aren't we? You know, and I think that's very different to what's happening on the private markets. In the public markets, yes, there's a lot more maybe retail in there, a lot more fast money in some of these companies. So if there is a press release from the White House, it'll have an immediate impact. On the venture side and also on the private equity side, you know, you're one step removed from that. You know, you have several years to work with your portfolio company to help position them, to help them grow. So you're less exposed, but it doesn't mean that you're not impacted. It does have impacts, but I think you can still focus much more on the business itself.
What would you say is the biggest opportunity in healthcare investing today?
I think from the private equity side, we are where I'm focusing. What interests me most, of course, is the mid-market space. I think we are seeing the opportunities that this had created is that we are seeing some potential take-private opportunities, where you have some of these mid-market companies where the public markets aren't working for them as such. And we're also seeing the companies that may have wanted to go public are not, so they're staying private. That's also creating some more opportunities for us.
What does that do for the healthcare market structure if private healthcare companies are staying private longer? Who funds those businesses? And then how do, as an earlier stage investor, you think about what exits look like?
So on the venture side, of course, I'm talking again about the innovative drug development companies. Your exit is generally to a pharma partner. Usually when you have a good clinical data, you've proved your drug works, and the pharma are usually much better at commercializing these products and taking them to the next level. So that's typically your exit. On the private equity side, of course, we're focused more on companies that have products, services and technologies that are commercial stage. So there, your funding needs are less of a drive for you to go public. So in essence, a lot of these private companies in the private equity sphere, they can usually ride it out. It's more about whether their investor or their owner needs an exit that might push the sale. But I think that's why they're much more insulated from this volatility.
As more capital comes into private markets, you have newer investors, the wealth channel, that's just adding more capital coming into the space. How do you think that's going to impact, one, where capital flows, and two, how companies exit and who becomes the next net new buyer of some of these assets?
Yeah, I think what I would expect is that the companies will be better capitalized. We'll also be able to focus, as I said, even more on growing those businesses and be a little bit more long term. I think that's maybe the main risk for the public markets at the moment, is they're getting more and more short term, and you can't really run a business like that. So I think having companies better capitalized means that you can really grow and focus on the things that count, making sure that your product, your service, your technology is optimized, doing, targeted roll-up opportunities, geographic expansion, things that will really meaningfully add to the business and help it grow.
It's an interesting question, too, as we think about the wealth channel becoming a more prominent LP in private markets. Healthcare is so core to our well-being in our lives. Do you think that there's obviously an educational push helping the wealth channel or individual investors understand private markets? Do you think there's a connection between those two things, though? People investing into a sector that actually may directly impact their lives, whether it could be their family members, it could be themselves at one point. How do you think about that aspect of the healthcare investing story?
On the venture side, we've always seen a lot of high net worth and family offices come into that space. And as you say, I think they're gravitating also to now start looking more and more at the private equity space to create that balance in their own portfolio. And what we do see is that they tend to really like healthcare because it's emotive.
How do you think about the impact that healthcare investment is going to have?
If you have a good new treatment for a particular disease, and if it has a big benefit for patients, then of course the doctors are going to use it. Of course the health insurers are going to reimburse it. So it's completely intertwined, which is also one of the things I really love about this sector.
Now you're part of EQT after LSP got acquired by EQT, and there's the benefit of being part of a larger scale platform. So first, let's unpack what's the value in not just being one type of healthcare investor, but you play all the way from venture to late stage buyout.
So on the venture side, the LSP side, if you like, we do early stage investing. We see about 2,000 deals come across our team every year. And we also work in a similar way to EQT in that we always work with external, we call them key opinion leaders. So we're very connected into that network of doctors, physicians, biotech executives to help us in our diligence process. Then on the private equity side, the way EQT has always worked is working with these industrial advisors, senior executives who've done, they've done it before, successful entrepreneurs, successful business executives across all of the subsectors of healthcare. How the two marry together, I think, is really interesting because what it does do is it's kind of a bellwether for the sector. It really can help us inform where is the direction of play.
What about at the upper end of the market? What do you look for in a business that you then apply to the early stage? Because I think healthcare is so interesting in that it can take so long in the early stages to get to commercialization. Mm-hmm. And yet, when it happens, then things generally get very large in terms of size and scale of outcomes. But what are the learnings that you take from the later stage investments that you've worked with and then filter that back to the early stages?
So I think what we're all learning is a lot about the financial modelling and discipline from the private equity side and helping that focus your investment ideas. I think it's also been very useful in terms of the industrial advisor network from across EQT, and also the key opinion leaders from the venture side have been helping on some of the private equity deals. So it's definitely a circularity. It's not a one-way traffic.
How important in today's world of healthcare investing do you think it is to be a scaled platform?
So we're a scaled platform, but we also have a very long track record on both sides. Both on the venture side and the private equity side, we are one of the leaders in healthcare investing in Europe. I think there's very little happens in healthcare in Europe, certainly that doesn't come to us. So I think that really is a huge benefit.
It's a really interesting point because I think it also opens up your investment aperture in the context of, I think of the concept of your fund size is your strategy. Mm-hmm. To some extent, that's true. I think the place you play is also your strategy. But if you have the ability to play across different stages and different quantums of capital to play at each phase, you can then assess the risk reward and say, if you were only a venture fund or a mid-market buyout shop, you could only do those things. Now you can say, well, maybe I want to wait a little longer, or maybe I want to go a little bit earlier, take a little bit more risk, but I'm getting the commensurate reward or return for that. How has it changed your framework and mindset for investing, if at all?
I think you invest with more confidence because we also have, that skill set, both in-house and within our network that we can call upon to help us do our diligence.
What would you say makes you most excited about healthcare investing right now?
Turmoil always creates opportunities. I think there is a lot of companies out there that are really exciting. I think also AI is, even a couple of years ago, I would have been scratching my head trying to figure out how it was going to play into healthcare. Was it all hype? Was it reality? I think we're now seeing the reality of it. There's a lot of really exciting companies coming through there, not just pure play AI companies, but how it's informing lots of different subsectors as well, I think is really exciting.
So you, to some extent, mentioned a risk that's for the individual rather than the investment side, but thinking about the investment side, What's the biggest risk in your mind right now in healthcare investing?
I think it's been an extraordinary couple of months, with changes at FDA, NIH, most favored nation. All of these things, I think, have thrown the market into a little bit of turmoil. I am hoping and expecting that a lot of that will settle down.
What do you think the longer term effects of this are? I mean, you have research grants and funding leaving the system. There's a lot of affiliation with universities as well, and research projects, and people, they potentially move. Mm-hmm. Where do you think not just capital, but also talent ends up flowing?
I think we are going to see more of it coming to Europe. But I also believe in the resilience of the US research environment as well. I think universities and academic institutions have always been creative in the way they can manage to attract funding. So I'm an eternal optimist, so I do believe that also in the US, they will find a way through. Those most exciting projects will find a way of getting funded and moving forward.
Do you think there will just be more of a shift to private capital? That could also be, I don't want to limit it to investment capital, perhaps that's foundation capital, mm-hmm. high net worths deciding to support projects, but do you think there's going to be more of a shift to private capital funding all sorts of research in healthcare and drug development to help replace some of what may have been lost?
Yes, I think you're right there. And I think perhaps it'll also make the universities or academic centres a little bit more focused on their tech transfer and a bit maybe reach out earlier to the industry to see where they can collaborate earlier. Increasing collaboration earlier on could turn out to be beneficial.
Are you going to reorient how you think about that tech transfer and pipeline? And does that mean doing things a little bit earlier or creating infrastructure to help enable some of these research projects to get off the ground or early stage drug development to get off the ground that you might do a little bit differently?
Yeah, I think on our venture team is already very well integrated with some of the main research institutions across Europe. But I do believe that, yes, that'll also be happening more so in the US. There will be more integration across the venture teams with the tech transfer teams.
What innovation are you most excited about in healthcare?
I only have to pick one.
You can pick more than one. That's great to hear. That would make me very excited to hear.
I do think that with AI layered on top of drug development, we might be able to pull out patterns we couldn't see before and realize that certain combinations of drugs might have a much more positive benefit. I still also believe that cell therapy, where you take the patient cells and basically engineer them so that they can fight the cancer cells, I think that's going to be coming back in favor in the next few years and really show potential to cure cancer in some patients.
Why is cell therapy going to come back?
I think it's going to come back because it is one of the few technologies that has shown long-term effective cures of patients from advanced cancers.
I always like to wrap up these conversations by asking people what their most interesting or exciting alternative investment is in the space they're in. So looking forward, what are you most excited about investing into in the healthcare space?
Well, I suppose at my core, it's innovation. So I would love investing in, being able to get new medicines to more patients, especially patients with rare diseases. I think this is an underappreciated segment for patients with rare diseases. Generally, they have no treatment options. So I think what really excites me is to be able to be part of bringing some innovative treatments to some of these patients.
I think that's a fascinating way to wrap this up because it shows, one, there's a real investing acumen to this, but two, there's real impact associated with it. And that seems, it's been a theme that's been threaded throughout your career. You've been doing it from a research and science perspective, and then you've been investing in it. So it's a pleasure to have this conversation with you.
Thank you so much. Enjoyed it very much. Thank you.
Thank you for listening to this episode of The DNA, Capturing Culture. You can stream all the episodes on your YouTube channel at Alt Goes Mainstream AGM. or read about the episode at my Substack at altgoesmainstream.substack.com. And of course, special thank you to EQT and the executives that shared their stories and perspectives. Thanks a lot and have a great day.